Thank you, Julia. So first I'd like to call up Shannon O'Hara from the University of California, Berkeley. So the challenge is that in this Central Californian Valley, which is an enormous food producer in the US, there are huge issues of water and air quality, and then corresponding health problems. And part of the reason for this is that farmers lack knowledge of sustainable farming practices. So Shannon's commitment is called Teach a Farmer, Save a Species, which is a commitment to develop curricula that farmers can use to learn how to improve sustainable farming practices. Thank you, Shannon. And second, I'd like to call up Brett Kokonya from Kenyatta University in Nairobi. So Nairobi, which is the capital of Kenya, has witnessed a rise in old and privately owned buses becoming basically eyesores when they break down on the side of the road. So they're a blight, but they also attract garbage, dumping, toxic chemical, leaching, etc. And poverty level in Kenya has sort of separate issue, and they'll tie in. Poverty level in Kenya has decreased slightly recently, but there's still large numbers of people living under $1.90 a day, 36% of people, and that's the international poverty line. So Brent's commitment is called Mangana Manat. I'll try again. You can say it.
It's called Manganya Matatu Community Centers. Yeah.
And it's a commitment to renovate these old buses, to repurpose them so that there are public meeting spaces, cyber cafes, meeting spots of other sorts, and to do it in a way that also provides employment for the people who are renovating them. Thank you, Brent. So with that, I'd like to call up my co-panelists. Who I'm going to ask up to introduce themselves. And we'll start by asking everybody to just explain how you got into doing what you're doing today and why you're passionate about it. So Duquesne.
Well, thank you, Julia. It's a pleasure to be here, that's my first time in Chicago, so I've experienced the weather and the whole city. So it's an experience. But my name is Duquesne Fednard. I am originally from Haiti. And 9 years ago, I decided that I wanted to approach development differently. So I came to the US, I studied, I had my master's in New York, wanted to go back to Haiti and do social business. So I wanted to tackle social issues, applying a market-based approach to them. So the first thing that came to mind in Haiti is, when I went back, is how do I tackle the issue of deforestation due to the high usage of charcoal as the main cooking fuel in Haiti. So I said to myself, let's create a factory. Let's create the best cook stove possible at a price point that makes sense for the people, and to really give them a tool to decrease deforestation through decreasing the usage of charcoal. So through that work, I realized two things. I create a great stove that people really like. 96% of our users extremely like our stoves, but the stove weren't moving at the pace I was expecting them to move. I thought that we should have a line every morning at our factory for people to come get the stove, and that wasn't the case. So through that work, I realized there was two things. You could have a great product that people want, but if people cannot afford it, then that's an issue, despite how they feel about the product. So then I start looking into how do we then sell to a population or to a market trench that is extremely poor, that may not have the disposable income to actually acquire the product or the service that somebody may want to offer. And through that work, I realized there's two things. While we are doing this, so I start investigating exactly how somebody who's very poor that can benefit from the stove is not purchasing the stove, and realizing, there was no way they could purchase a stove that cost $12, because each day they make $2, that $2 goes just to feeding themselves. So pretty much like they were using everything that comes to their hand to just keep themselves alive. And I start really looking into it deeply again, and I realizing those people were paying the highest marginal cost on just basic staple to just keep themselves alive. So I saw this as an opportunity to start thinking about what kind of financial model can we create out of these two issues that will then create an opportunity for those people to actually be able to afford basic services such as our cook stove and others. Yes. So that's kind of get me into this.
So this is one story, and we'll get back to the sort of where financial inclusion and economic development fit in. Tierra, would you mind introducing yourself?
Hi, my name is Tierra Bradford. I am a community lender for Accion. Accion is a nonprofit micro lender, and we provide capital and coaching to small business entrepreneurs in all of Illinois and Indiana. I got to Accion a little bit after school. I graduated 2 years ago, and I've always had a passion to help small business owners. I myself grew up in the low to moderate income neighborhood, and I see how the lack of small businesses in those neighborhoods can really have an effect, especially on the children. And so being able to work at Accion, I'm always in the community. I am the community lender for the West Side, and I am the person that small business entrepreneurs on the West Side can come to me, whether it's for capital or for coaching or just any advice. And that's why I love Accion. I love being able to be face-to-face and connect with the entrepreneurs and being a resource for them, because they come from places where either there are lack of resources or they aren't aware of the resources available to them.
Thanks. And Parag?
Hi, good afternoon. My name is Parag Mehta, and I'm with Mastercard. I got here after spending many years working in government and politics. I'm an immigrant kid. My parents came here from India in 1972. Any other immigrant kids in the room? Parents are immigrants? So some of you might appreciate this. When I was growing up, I was told you only have 3 options for your profession. You can be a lawyer, you can be a doctor, or you can be a businessman. I chose to go into politics. I ended up spending 4 years in the Obama administration at a civil rights agency, pretending to be a lawyer. And then I spent 2 years as chief of staff to the Surgeon General, pretending to be a doctor. And now I'm at Mastercard, pretending to be a businessman. But the function that I play there is I oversee the Center for Inclusive Growth, which is the philanthropic arm of Mastercard. And each year we give out money and data insights, and we put out research to try and help answer the question, how do you eradicate poverty? How do you close the gap between the haves and the have-nots? And the more important question we're starting to answer now is, how do you close the gap in information between the people who are in the know and the people who are in the dark? And those are the challenges we're trying to tackle at the center.
Thank you. And I'll give a very quick introduction to myself as well. So I am at McKinsey now. I'm a partner. I got here actually through a career in academic physics. And in the case of my family, I thought the only thing you could do was to become an academic, because both of my parents were academics. And it took me, I had sort of limited imagination, it took me until I was a postdoc to realize that that was probably not the case, and that I wanted to do something different. So I went to McKinsey, and at McKinsey, I've worked in a whole range of areas, but I'd gone to Africa for the first time when I was 19, and that was the first time that I had really seen effectively, poverty, but then I started working in financial services, and I realized the connection between the two. And I've now spent the past 8 years or so starting to specialize in financial inclusion, largely in emerging markets, but I also do some work that touches in the US. So financial inclusion, a common theme running through all of this is that you need to have ways to finance your business, to finance your purchases, to do what you need in order for economic development to work. And we thought we could talk a little bit about what everybody does, but with that as a theme, this thing, financial inclusion, is a real enabler. So in some ways, maybe, Duquesne, we can go back to you, because you were just at this point of saying, okay, look, here's an issue for people who actually want to buy things, but perhaps can't in the moment.
Yes. Before even I was thinking about creating this new financial model that would actually create a saving out of consumption, existing consumption of the people that I'm targeting, I went to every microfinance institution in Haiti and tell them, hey, here's a great product. I have a great product. Can you create can you finance that for me? And the answer I always get across the board was like, wow, I really applaud what you're doing. You're really good, and it's good for the environment. It's great, but unfortunately, we can't. Why? The thing is just there's a cost to financing, and the cost is that for microfinance institutions, item that you pay $12 costs the same in terms of managing that loan as the one that somebody, an item that costs $500. So therefore, for them, they're looking at it how do we create a product where, we're not getting money out of it? And that's become something that I really start thinking deeply about, because the people who need, or the poorest who would need the most help, still, they need to find a way to access services and to be able to attract institutions to those services, such as microfinance institutions and bank and other financial services. They still need to make them viable economically. And that's where the question became, how do we make somebody who's extremely poor become viable financially? And that's how, I start looking into this, as it's they still spend money, but on what do they spend money? They spend money on basic necessity to keep themselves alive. How do they spend that money? They spend that money in buying very small amount of staples like rice, beans, cooking oils each time, because they just don't have enough to go buy a bag of rice. They have to buy half a pound or a pound each time they need it. But each time they do that, they end up paying the highest marginal costs on those products. So I saw the opportunity of buying small, not having the ability to actually take advantage of bulk purchases, as well as the fact that you need to eat, as an opportunity to create a new financial mechanism that can create savings. So basically the whole model rely on grouping the people together into co-ops, take their small demand, bulk it into one bulk demand, and then negotiate discount, and then use the discount as a way to, one, lower the price for those items for the people, and then put money aside each time they purchase the very same rice they have to purchase, regardless. And then using that as a lever now to make them more financially included, so that a bank, a financial institution, can see them as true potential customers.
So there's one thing that some of the work that I do in financial inclusion that I think of when I hear this, and I'm curious how everybody responds, is that one reason that small purchases have the highest marginal cost, and therefore sort of you're hurting poor people the most. One reason for that has to do with the cost of cash, because cash transactions cost a lot of money, and if purchases are small and you always have a cash transaction there, that can make the transaction even more costly, and therefore you have to boost up the margin. And I know this is something that you, Parag, think about quite a lot at Mastercard. I wonder if you can sort of talk about the role of cash in all of this.
Sure. Our work actually began 12 years ago with studies on the cost of cash. And that led the company, which if you think about what Mastercard is, we're a digital payments technology firm, right? We help move money and information across the entire world. But this issue about the cost of cash, if you really think about it, cash is unsafe. If you're getting paid in cash, if you're living in a developing world and at the end of your factory shift, you have to stand in a long line, get your cash, and then somehow make it from that place to your home without getting robbed, without losing it. If you think about the lack of transparency that cash creates, it allows for corruption. It allows for people to not pay their taxes, which is bad for societies. If you think about the things that are spent on cash, sex trafficking, terrorism, drug trade, all of these things are done in cash. So there's a price that not only we as individuals pay, but we as a society pay with cash transactions. And on top of all that, cash is disgusting. I mean, if you think about it, that bill in your wallet, you don't know where it's been and where it's come from. And so from a pure public health standpoint, I'm very worried about the constant movement of cash through our system. Just something else for you to muddle on after this panel. So the point is that led us to this business strategy around a world beyond cash, which of course Mastercard and other digital payment companies are uniquely suited to do. But from a philanthropic point of view, what we realized is if you want to move people out of poverty, you have to make them known people in the world. Meaning, if you want to start a business, and you think of the work that Tierra is doing, then it is in your best interest to develop some kind of transaction history so that when you go to a bank or when you go to a micro lender, they know who you are. They have some legitimacy to give you a loan. And moving into digital payments is a way to create identity and a way to create payment history and purchase history in a way so that the financial institutions know who you are. And that is good for you as a business person, it's good for you as a worker, it's good for you as somebody who's trying to get out of poverty.
So, Tierra, maybe you can talk a little bit about, okay, like what does it actually take? And now here in the US, what does it actually take to try and get people who haven't been taking loans or who haven't had full access to loans that capacity?
I would say a lot of it takes patience and understanding. I think that a lot of times, like small business entrepreneurs are scared to take out capital because they know right away that they aren't going to be able to qualify for a traditional bank loan. And that's where Accion comes in. Like Parag was mentioning, it's important to have digital currency and be able to see like all of your transactions. However, at Accion, we understand that a lot of communities that we work in, a lot of people haven't had access to financial literacy. They haven't had access to different resources where they could be coached on how to handle their business finances. And so we look at that. We look at cash transact. We look at receipt books. We look at different ways that they say that like they pay their bills, and we do landlord references, different creative ways, but at the same time, we have a business coach available, and also myself, I coach the clients to learn how to not meddle or mingle your personal and your business, how to start depositing everything, because you have to see a paper trail. And we sort of get them ready for a bank loan. We are not anti-bank in that we're like, come to us if you just want to use cash, but we are like, come to us if you use cash and you would like to be able to access bank capital in the future. And so that's where Accion, again, we come in and that we sort of train and coach small business entrepreneurs so that they can be bankable in the future.
And this picks up on a thread actually that's common through a bunch of the work that I do, which is that, on the one hand, there's something incredibly enticing about digital financial services as an enabler for all sorts of stuff that we're talking about. But for a lot of people, it involves an immense behavior change. You're not used to using a phone. You're certainly not used to transacting digitally. And it's also just, it's scary, and it requires real education about what's this financial service that you're using or how could you use it. And I kind of wondered, Duquesne, maybe if you want to talk about the education component in the work you do.
Yes, and that's actually, and I believe that technology is perhaps the most effective tool to actually get people to be financially included. Even the work that I'm doing is actually centered around technology. So we create an actual application. It's an app on a phone that we give to the community organizer, or the community-based organization that is using that app to actually register the people, to track all the transaction, and all the deposits are done electronically. So therefore, this is to me a very good tool. But on top of that, it's very important to ensure that people understand why saving is important, and to really do, to make sure we have all the links together. So part of the commitment, because our services is free of charge, because what we do, we take whatever margin that we have earned on bulk purchases, and then we split it in three different ways. 40% stay with my company to cover overhead costs. 40% goes back to the end user in the form of discount on the price of the product itself, and also on dedicated savings that we put aside for that person. And the other 20% goes back into the community-based organization. But in return, what we ask the participant or the customer is that they give us 2 hours of their time per month to come for training. And that training is specifically on how do you make decision on your purchases. When you have limited capital, and you have 3 needs. How do you go about that? Financial literacy. Why saving is important. Why when you make $2, then you cannot eat that $2 here and there. Why do you need to save X percentage of it? You know, so this was very important because you need to change that person's behavior in order, if you really want to break that cycle of poverty, it's not just access, but it's also changing their mindset. You know, one of the things that I realized, for instance, through the work that I do in Haiti, if somebody let's say, like, you know, somebody give them a $20 that they did not expect, the first thing that comes to their hand is to buy beers with it. You know what I mean? But it's something that you need to get them to think, okay, well, that, if you put it aside, if you invest it, then that can actually create more opportunities for you. So, but this is not something that's intuitive, and it's something that is learned, and part of the work has to also be, you know, you have to include education into it to make sure that that aspect is also covered.
So Tierra, you're nodding as Duquesne is saying all of this. You want to share a little bit about your...
Yeah, of course. So I always say education is like the most important part, like during Accion's loan process. And just being an overall client of Accion, we are a community lender, we are a relationship lender, and so we aren't transactional in that we look over your finances and then we spit out a number and say this is your loan amount, and then have a nice day, we'll see you when your payments are due or when you aren't making your payments. We are truly a relationship lender in that we take your hand and we walk you like through the process. A story that I always tell my favorite clients when I first started at Accion, we have a product called the Credit Builder product, in that we don't have a minimum credit score. We look at your credit history, and if we see like you've been making on-time payments, or if you have an explanation for the derogatory marks on your credit, we'll take it into consideration and we'll still offer capital. I had a particular client, it was a husband and wife. They came to Accion as true credit builders, and it was a long process for me as a new lender, but my manager at the time sort of walked me through the process, held my hand, but also I was able to walk the clients through the process. And so they have a gumbo business, and that they make gumbo. I wasn't biased, I love gumbo, but I actually absolutely love these clients. And they were going through a lot. Their mortgage was being remodified. There was a lot going on, and they wanted eventually to have a food truck, but they were operating out of farmers markets. And at the time also, all of their business revenues were going into their personal bank account. And so during the credit builder process, we educated them on how to maintain good credit, how to keep low balances on your credit card, how to make sure your payments are all on time, how not to max out your credit cards. And so they took the loan from Accion. It was a small credit builder loan, but then they came back in 6 months because they were ready to purchase their food truck, and their credit scores jumped tremendously. It jumped probably 50 to 60 points for each of them. And so they were able to get even more capital from Accion to purchase the actual truck for their food truck. And then 6 months later, they came back to Accion after being coached with our business coach on how to separate your finances and also keep a track of everything. So once we saw receipts of everything, and we saw their personal investment in the business, then they were able to get an even larger loan from Accion, and now their food truck is up and running, everything. It looks amazing. They just sent me pictures a few months ago, and so I pride myself on that, and that they are true Accion clients, and that they came to us not knowing what to do and where to go next, and we were able to hold their hand. And honestly, I think their next loan or in the next place where they seek capital from, they are definitely ready to receive funds from a bank, and even more funds. So I do definitely think that education is very important, because not only we didn't just give them money and say, good luck, I hope your credit score goes up, but we actually held their hand and we changed their behavior. And now they give advice to other business owners, and they send other business owners to Accion and in their community, and that's absolutely what I love about it.
That's an awesome story. So, Parag, in some ways, right, you're looking at behavior change writ large across the globe. You want to talk about?
Well, I thought your question was so astute, and thanks for the example, Tierra. Just so you know, Mastercard and Accion, we're partners in this, and they're one of our global partners in helping to digitize the way that microfinance organizations speed up loans to folks like the food truck owners you described. But I think that the question about behavioral change is so critical because for whatever you're trying to work on, and I learned this back when I was doing public health work, it's often not a challenge of the right science or the right evidence or the right information. It's a challenge of trying to get people to change the behavior of what they've always done. And so sometimes I argue in the office that we should hire fewer economists and more behavioral scientists because we need to understand human behavior. But at the same time, I would also say that there's a danger in predisposing poor people as incapable of using technology, thinking that because they haven't had access to something, that the barrier to entry is too high and that we should find different solutions. There's a partner that we work with in India. Her name is Chetna Sinha, and she's the founder of Mandeshi Bank. Mandeshi Bank is basically a bank that they created for rural women living in the villages. And rather than making them come to the banks, where the banks would not even let them in, wouldn't loan them money, wouldn't take them seriously, they actually created a nonprofit bank that actually goes to the women's homes and allows them to do small banking through digital products. And Chetna has a line that I always liked. She said, "Don't invent poor solutions for poor people." And I think that's really important for us to remember because while technology can be intimidating, there are also ways through financial literacy training and financial education that we can get over it. And one of those ways that's particularly important to the people in this room is the demographic dividend we get from young people. We know that in the developing world, youth are more likely to be rapid adapters of technology, but you are also the most important educators for your societies on how to use that technology. So think about your parents or your grandparents and how they're now using Facebook and WhatsApp, and they're tweeting and they're sending text messages. That didn't happen by accident. That didn't happen because they were a technology-prone generation. That happened because you, their adorable children and grandchildren, force them onto those platforms as a way to stay connected. It's amazing what the human mind is capable of doing when need meets invention, right? The same is true with financial services. I think that young people in these developing countries can be a major force for not only adopting technology, but also helping to bring the society with them.
So, okay, Parag, you're pretending to be a businessman. And question.
Behavioral psychologist now.
Right. But so the question for you is, inclusive growth, why do you care at Mastercard?
Yeah, it's a great question. I was suspicious because when I joined Mastercard a year ago, I had never worked in the private sector. And when they recruited me to this job after years in government, I had this belief that private sector does philanthropy to make themselves look good. But what is the real commitment to doing this? And what convinced me to come to Mastercard as opposed to other places was I heard the CEO speaking on a panel about traditional CSR being broken. CSR is corporate social responsibility. He said traditional CSR is when you write a check to something. He said the problem is that the challenges we face in the world today are too big to be solved by that kind of philanthropy. And secondly, because that's not sustainable. He said at the end of the day, I'm a CEO. I have a fiduciary responsibility to my investors, my shareholders, my employees. I can't just keep giving away money at a loss over and over again and think that that's going to sustain. To some extent, that makes us look good, but it's not profitable. So what if I could tie my social impact strategy to my business strategy? Well, at Mastercard, we're in the business of signing up banks to be our credit card users. And they are in the business of signing up people to get bank accounts. So financial inclusion made a lot of sense as a business strategy. But where we came in as the center, the philanthropic arm, is we said there's a bigger challenge than financial inclusion. The bigger challenge is inclusive growth. How do you make sure that societies, as they grow, that growth benefits all segments of society, that it doesn't leave certain segments behind? That's our idea of success. And so with that remit, our CEO gave us a lot of latitude and a lot of money and a lot of resources to say, okay, go figure out how to do that. And we spent the first 3 years through research and data insights trying to figure out some solutions to the problem. And now we're working with programmatic teams like the one at Accion to try and fund those interventions. But the other thing you should know about Mastercard is we're not just using our money to do this. We're using our technology and our data and our global network and our 14,000 employees. We're putting all of the resources of the company toward that, which makes me feel good about working there because then I know it's not the pet project of one CEO, that this initiative is going to last for years and years to come.
And think about inclusive growth on a more micro level. Duquesne and I were talking earlier today about sort of the jobs angle of everything that he does. And maybe can you talk a little bit about that?
Yes. So you have to take a holistic approach to breaking the cycle of poverty, and it's not just access, it's not just a saving, but it's all that comes with it. Because if you think of it like, for you to break the cycle of poverty, you have to, it's like a step-by-step process. And one of the steps that is very important is the question, how do you then increase somebody's income? And there's two ways that you could do it. You could look at it in the way of Accion is doing it, empowering small and medium enterprises to make them more profitable, give them more access to capital. But also you could look at it in an individual level where that person, making that person employable. And to do that, you need to create access, for instance, to education. And again, it comes back to the point where how do you do that in a way that is sustainable? That's always the key, because I believe that philanthropy is necessary for any society, but philanthropy cannot be the driver to break the cycle of poverty. It can't, because it has to be through private sector, and it has to be through the approach that you talk about, so it has to be a holistic approach. So basically part of my whole goal is while I'm doing this work is to see how can we create job in the process. And the way that we do that is we're creating, those co-ops, which I call community bodegas, that actually have people in them that are serving the community, that are taking those orders, those are jobs. And the savings that we are creating, so we create an opportunity for people who wants to get trained, vocational training, then they can get a job. If they want to actually use those savings to start a small business, they can use that. So it's all kind of tied into really all the different tools or the pillars that we know for a fact that is going to help somebody break the cycle of poverty. For me particularly, I think there are very basic things. Besides having the will, okay, this is another aspect I think is important, but you do need to have, people need to have access to 4 basic things: education, food, healthcare, and an opportunity to actually to get in livelihood that they need to actually, if they want to escape poverty, to do it in a way that is sustainable.
And let me give you guys just a couple numbers. You may all know these, but just for sense of scale. There are roughly 1.6 billion people in the world who are financially excluded. And what exactly financially excluded means isn't a hard and fast definition, but it means don't have access to basic financial services. A way to save, a way to lend at anything like a reasonable cost, and often a way to just make payment transfers without using dirty, disease-prone cash, right? So if you say, hey, the financial tools are really important to being able to do the sorts of thing that Duquesne was just mentioning, and to do those things, it's necessary to do those things to really spur inclusive growth. It's a really big deal in terms of numbers. And in terms of GDP, just an example, again, to give you a sense of scale from a paper that I wrote about 2 years ago, we projected then that massive growth in financial inclusion, digitally driven financial inclusion, could boost GDP globally by $3.7 trillion. And that's equivalent to the GDP of Africa. So these things are all tied together in really inextricable and important ways.
Can I add just
yeah, please do. Please.
Because the reason why Tierra and I are also really laser focused on micro and small enterprises is that 90% of jobs in this world are created by companies that have fewer than 50 employees. And the other thing that's important is in the developing world, that's 400 million enterprises that we could potentially be digitally connecting in order to make them prosperous. Because the title of the session was financial inclusion at the bottom of the pyramid, but to be really clear, where the two of us are focusing most of our attention is not quite the bottom, it's the layer right above the bottom, what I call the catalytic middle, right? Because those are the people, the job creators, the engines of economic growth, that we believe that if you invest in them, if you give them the financial education and the tools, they will not only be eligible for credit and unlock capital, but they will create jobs. And if they create jobs, then it helps the people that Duquesne is trying to reach, which is the people who are really living at the subsistence level, trying to bring an entire community up.
So with that, maybe, Tierra, could you talk a little bit about, like, who are these people who you work with? You gave one great example, but just what's the range of types of folks and businesses?
A large range. I have personally worked with business on like daycare, small daycares, small storefronts, candle makers, but I specifically I work with clients on the west side of Chicago who are in communities where there are either a lack of banks and a lack of resources that they know about. And so sort of what I have to do in being a community lender is take like a grassroots holistic approach to this, and I can't assume that, okay, hopefully these clients will find out about Accion, and then once they get to Accion, then I'll be able to help them. I have to literally plant myself in the neighborhood. For one example, North Lawndale, which is on the southwest side of Chicago, I can't treat it the same way as I do like Oak Park, which there are a lot of different banks and organizations geared towards small business owners in that area. In North Lawndale, there are a lot of religious and Christian organizations. And so Accion, we have to partner. I have to meet with different Christian organizations, and these organizations have hubs in these neighborhoods where business owners, and not even just business owners, people in the community come to that place for resources. And I have to plant myself there and not just sell capital, but let them know that there's someone there that we can have an access to capital panel, or we can do like cash flow training. There are different things that we have to take into consideration when we're looking at neighborhoods on that level. But like Parag was saying, these small business owners are providing jobs in their neighborhood, and especially at Accion, majority of them provide jobs that pay well above the minimum wage for the city of Chicago. And so they're revitalizing their neighborhoods, and that they're providing these jobs and bringing in income in these communities. And as well as, once a small business owner has a good experience and they feel like they've been able to grow from Accion, then they refer someone else, and they create like this network and community. And then there's more business owners and people that never thought that they could open a business. They say, oh my God, I can go to Accion with just an idea, and the business coach helped me come up with a full business plan and financial projections. And now I know how much money I have left over at the end of the month in case I do want to take out capital. So that's why I think that community comes in, and also just not just being an organization that's here. There are a lot of resources available, but also you have to go to these communities and plant yourself and build that trust, and so that people are willing to come to you and build that relationship.
So I'm gonna put these guys on the spot a little bit. I'm wondering if each of you would mind sharing something about what you hope that what difference do you hope your organization will have made 10 years from now?
Want me to start?
Yeah, sure.
So I hope that this new approach to poverty alleviation is something that can be applied not just in Haiti, but everywhere, because poverty exists in every community, may not be at the same level, but poverty in Chicago may look very different than poverty in Haiti, but nevertheless it's poverty. And I think and the fact remain the same. The poorest of the, in the community always end up really spending on a marginal standpoint the most on basic services in general. It's always been the case. So my hope is that in 10 years that we have a new way of tackling poverty that, definitely really give people a tool to escape poverty. Because if you think of the tool that exists today, they all have embedded costs into them. That is still, to me, is a tax to someone who's already poor. And hopefully, I'm hoping that, we can think, and this is a call for you guys to really think about think about, different ways that you can actually, create changes that are sustainable, that really can give people a chance to really truly escape poverty. Yeah.
So where I see Accion in 10 years, or the progress the organization has made, is I would like to see total revitalization in communities. Just to go back to my North Lawndale example, I keep using that because in addition, I also volunteer in North Lawndale with a grade school, and I mentor 4th grade students. And talking with them, a a lot of them have never been downtown Chicago. They only know their community. However, in their community, there's a food desert. They have their lack of schools, their lack of just simple basic businesses that other neighborhoods in Chicago experience, and that they have coffee shops, different social enterprises, after school programs, just a lot of different businesses that I feel like when they're in North Lawndale, I want these children to be able to walk down the street and they know the store owners. They know that they can go after school to this person, their across the street neighbor, and say, oh, they own this coffee shop, I can study here after school, or they know that they can go to the fresh produce deli down the street, and they don't have to travel far, and just know that they don't have to go out of their community to be able to experience certain things. I feel like basic needs in these communities. That's what I would like to see, is these communities be totally revitalized, and that the children and the people in those communities don't have to seek things outside of the community.
So in terms of commitments, Mastercard has made a commitment to financially include 500 million people by 2020, and we're on track to meet that goal. We at the Center for Inclusive Growth made a commitment to get digital financial services and reach 1 million strivers. These are high potential micro and small businesses in the developing world. We're also on track to reach that goal. But since you asked me what my goal would be for 10 years, it would be to unlock credit for millions of small business owners, and to come up with a model that other partners in the private and public sectors can use in order to scale that idea. I also would like to say that I hope that one of the things we accomplish in the next few years is we break down the barriers between sectors when it comes to solving these problems. I worked in government for a long time. We did not see always the private sector as a real partner in this. Now I'm in the private sector. There's a lot of concerns about the way our governments are functioning, the increasing turn towards nationalism. I think there's an opportunity there for private sector companies like mine to step forward and fill the void. But at the end of the day, as a citizen of this country and as a citizen of the world, I want to see these two sectors work together. I want to see government be more effective in addressing the needs of their people, and I want to see private sector seeing a long-term sustainable role for them in addressing these challenges, not just because it's good for the world, not just because it's the right thing to do, but because it's also good for business.
So just one reflection from me as you guys break out to your tables, which is that, you know, from my point of view, I'm totally bought in that financial inclusion is an incredibly important, it's not important in and of itself, it's an incredibly important tool to do other things that are extraordinarily important for inclusive growth and development. And that digitization is a really important component of enabling it to do that. But there's one thing that I think a lot of us have a sense for intuitively, but there need to be people that go out and understand more and really pioneer models, which is really making the link between the digital economy that's coming and associated financial tools that help finance digital purchases and the inclusive economic growth that we're all working for. And so for me, one hope and one thing that, I encourage you all to think about it, maybe talk about at your tables along with everything else we've talked about, is what is that link? We talked about the catalytic middle. That's, in my view, that's part of it, but you've also got billions of smallholder farmers in the world who are at the very bottom. How do we get those people jobs, and what role does financial inclusion and the digitization of financial inclusion play in that? So.
Great. We'll have about 10 minutes now just to discuss what you've heard up at your tables. And the folks here are going to be roaming around, so if you want to grab Duquesne, you can wave him over and ask him a question. But just be thinking, we'll have 15 minutes after that for a traditional Q&A where you can ask questions of any of the panelists and Olivia as well. And then we will end right on time because I know everyone's excited to go to the plenary.
Let me give you one fact about actual connectivity, and then maybe I'll toss it over to you guys. So the fact about connectivity now is that by 2020, the GSMA estimates that something like 90 to 95% of the world's population will have actually close to 3G coverage. So at this point, actual connectivity is, you've got a sliver of people for whom it's an issue, but when you think about the 1.6 billion or however you think about the large tranche of people who aren't addressed, that's no longer going to be the barrier. And therefore, do you want to?
Well, I was going to say, and therefore, I think private sector companies, but also social enterprises and NGOs are all trying to answer this question of connectivity. How do we put the technology, how do we put the 3G in the hands of people? So you asked about rural populations specifically. So look, I think that this is a combination of private sector interventions, but also government policy. When I worked in the federal government, there were proposals coming before the Obama administration about making free Wi-Fi possible in agricultural and rural areas where Verizon and T-Mobile and Sprint weren't going. And what stopped that from happening was the incredible lobbying efforts of those companies to prevent it. Not because they were going to go in those markets and sell the product, but because they didn't want us to do it as a government, because it took away the opportunity for them if they wanted to do it down the line. And so, look, I think we have to be realistic about the politics behind these things. And if you don't like that, and if you want to change the way that is, then you have to go vote in a couple of weeks, and you have to say so.
But I would add one thing. I remember like when we first got the cell phone companies to go to Haiti, and one of their actually advertising billboard was a woman on a donkey with a cell phone and it's here. So that really is very telling, because that's really the connectivity aspect that you're talking about. And I think like, you know, what's really important, I don't think like the technology itself is there, is the cost of it. Because still today, like for instance, like, you know, for those communities, like, you know, in Haiti, they charge you by megabyte. So you could actually get 10 megabyte worth of internet, and that there's a cost to it. So it's really, how do we, you know, find ways to make it affordable for somebody with very, very little income. And I think that's what, to me, the challenge is, and that's what we should definitely concentrate on, but not necessarily the connectivity. I think like it's there already. It's make it accessible, and that's where the government and private sector need to work together to find ways to make it sustainable. The key is sustainable, because I don't think just giving things away is necessarily the way to go. It has to be something that the private sector is making money, and the government is enabling the policies and the market environment for that to happen, to make it like, you know, win-win situation.
Good afternoon. Thank you for the opportunity. My name is Samuel Diaz. I'm from Caracas, Venezuela. And we're running a venture tackling malnourished children and citizen empowerment. One of the things that we have come across is that there's a stigma and there's a mindset when we talk about poverty that they do not want to get a job, that they all rely on a messiah or they rely on a third party to actually help them solve their problems. And with a bit of trust, that can change. So my question is for you, what challenges have you come upon when you're facing those type of communities where people do not feel or they don't trust themselves enough to get themselves out of there? Thank you.
Actually, I have very direct experience with that. If you know Haiti, if anybody here knows Haiti, they know is a poster child for development. You know, that's where you have a lot of like, you know, foreign aid goes, and oftentimes the results are not what we are expecting. And that often create a culture of dependencies, right? Like, you know, and that, what you just said, like, you know, people then say, I don't think I'm able to escape poverty. But I do think though, while this is an actual factor, inherently, everybody wants to provide for themselves. I've never met somebody that feel, proud to be standing on the line to get a bag of rice. And I think once you actually work with people and you show them that they can do for themselves, and that's what we are doing to our work, to show people that you do have a power, and the power is that you're already spending money on very basic things, but nevertheless you are spending money, and by spending that money, by thinking out a different way to spend that money, you become more powerful. Now you are more in control. And I think, like, you know, when you start seeing people, I mean, when we start working, people, when I go and talk, for instance, to community members about what we are doing, nobody even understand it, or they don't believe it. But when they see their first $10 and they see, like, now I have access to this, it's changed their mindset. I think, like, you know, it will take a moment, but it's really like when they start seeing the impact, when they start living that impact, you will be amazed to see how quick that mindset changes. Because right now, they don't have any example. They haven't lived it yet. Once they get their hand in that first $10 that they did not know or could never save on their own, and they realize, oh, there's a way now I can save $10 a month. And then you would be so amazed to see how much pride and how much enthusiasm for them to actually, like, you know, take the matters in their own hand. And I think it really requires action and patience.
I would say one thing, or a lot of clients that come to me sometimes they've already been through like a process, the process of applying for like a bank loan or any sort of traditional capital. And so they come to us feeling undefeated. They come to us feeling like they give up hope. Or on the other end of the spectrum, a lot of them are like, I don't like credit. I do not want to take out money and have to pay interest on it. And like Duquesne was saying, I think that you have to be patient and you have to take a holistic approach. We cannot assume that everyone in poverty has the same mindset. We can't put it on them and say you are the reason why you are in poverty. We need to take into account the different institutions that are in place that are sort of keeping them down, and we sort of have to understand and come from a place of understanding for them and be able to sort of take their hand instead of being, I guess, condescending and sort of assuming that we know it all. And that's what I think, you sort of give them hope. And so a lot of times they come to Accion and say, you know, I can't take out this much money, or, you know, I just want to build my credit. And so we give them like a small $500 loan where they can build their credit. And, you know, they come back and say, okay, this is it. This is actually different. Like, my credit has grown and I think I'm able to access a bank loan. But you just really, like I said, you have to sort of strip away all of your preconceptions about people in poverty and sort of understand where they're coming from and not make assumptions, because a lot of times they have reasons for the way that they feel, and a lot of times it's not really their fault that they're in poverty, so you need to take that into account as well.
I just want to add one sentence to that, which is the work that Tierra and I are doing is predicated on the idea that people want to work, but that people want to work in decent jobs. And that's really important, because all the work we're doing to help small businesses succeed, at the end result of it is because they will create more jobs. So for the shopkeeper in the informal economy who has her 2 kids working in the back room, I want her to be able to go to the bank, get a loan, expand her business, hire and pay actual workers, send her kids to school.
Okay, great. We have our last question coming right here.
Hi, my name is Ferdinand from Wesleyan University in Connecticut. So my question goes specifically to you, Parag. I think one thing I've learned from this panel is before you can make a change, it starts with changing the behavior of the people you are targeting. And you said something very wonderful, which is you can, and that was a quote from a friend of yours, that you can invent a poor solution for poor people. So my question is, how do you make a long-lasting change among people without really affecting some people, let's say in the short term? So for instance, if I use, let's say I depend on $1 per day, and you want to convince me to switch from, let's say, using cash to migrating to the digital platform, for instance, what incentives do you give to people to really motivate them to want to switch from using cash to, let's say, using a Mastercard?
Yeah, that's a great question. So I think it's about a long-term investment in a place and in a community. You can't do these drive-by interventions where you say, I'm just going to introduce a credit tool and then I'm going to leave town and hope that everything else works out well. That would be the equivalent of going to a college campus and handing out credit cards to a bunch of students who've never had credit before and then saying, good luck with that, we'll see in a few years, and then you have a population of people that are in debt. Some of you are wincing as I say this because I think this might have happened to some of you. So the point is, you have to have a long-term investment in being on the ground, and that's exactly what Tierra is doing, right? She's staying in the community, and I think what's really critical, if you listen to my 2 colleagues up here, is they're working in communities where they have an expertise, right? Duquesne is from Haiti. He has a cultural competency in the people he's trying to serve. Tierra grew up right here in Chicago. She's serving the communities, not only in her job, but in her volunteerism in the communities that she's invested in. So we in the private sector have to have a long-term commitment to the places where we're committing. Otherwise, it's just traditional corporate philanthropy for the sake of corporate philanthropy. If we really want to make a meaningful change, you have to invest in education, financial literacy, introducing digital technologies, creating products and solutions that are going to be the right fit for that community, and having the cultural competency. If you're not willing to do all of that, then don't do it, because the first rule we have is do no harm. You don't want to try and do something for a community that's actually going to leave them worse off than before you found them. We have 3 minutes. Should we take one more question?
Yeah, should we get one more?
Okay, I was going to also say that the panelists will also be attending the plenary session, so everyone will be walking together, so you can always take that time as extra questions. But I will take one more question. Okay, this woman over here.
Hi, I'm Priyanka, and I attend Emory University. And the venture that I'm representing today is we're trying to start a national network of student organizations that give microloans to entrepreneurs in their local communities, either from high poverty areas or who own businesses that have an innately social mission. And I guess my question is, when we're creating our outreach programs to entrepreneurs, trying to reach what you called kind of the most impactful populations, there's a tension between the highest impact and the highest risk. So how do you kind of balance who you're loaning to and who you choose to target with your services, and making sure that you're accountable to the people who are funding your operations?
So I would say that's sort of a struggle that I think you will always encounter, in that taking on or trying to be more impactful, you're sort of taking on higher risk. But I think that we have to think about what risky to, like, who is this risky to? One, how much risk that you're willing to take on. So for example, I think that, or not that I think, but it's a fact that, like, the credit bureaus, the way they score someone or give someone a credit score, it can leave out people that are impoverished. But we can't, so if you actually have like an underwriting process where you just have a cutoff for the credit scores, then you're leaving out sort of your target population. So that's why I think that you should take a holistic approach, in that sort of figure out look at the community that you plan to go in or that you're in, and look at the needs of the community. A lot of times it's not necessarily financial literacy, it's just that they need more access to things, and so you provide that access, and you look at it in a different way than a community where people have no idea how to use credit, and you can't use that against them. You say, oh, we don't have a minimum credit score, we can just lend smaller amounts to you, and then hopefully your credit score can rise, and then you can be able to access more capital. So I would say, just again, like I always say, just go in sort of on a clean slate, with delete any preconceptions that you may have about that community. Really implant yourself there, and make partners with the organizations that are already in the community, and get to build that trust, and so that the business owners, they come to you and they explain and they express to you their challenges, and then you piggyback off that. But I don't think that there's like a cookie cutter way of having a microfinance organization.
I mean, I can add one thing, because for 3 years in New York City, I run the SBS, which is the Small Business Solution Center, which was a place exactly like similar to Accion, where businesses would come and you're trying to get them finances, you're trying to help them. One of the things that I realized through that work, what was happening, there's a lot of businesses that are actually very profitable. They just did not have any system. So what we did, you could think about what kind of services that you can create, like for instance, can you hire a pro bono accountant, or people young people like you who are already in, doing degrees in accounting, that can help them strengthen their books, for instance, because they would come with their receipts, but it was not organized. So there are things perhaps you can actually do, that not just relying on somebody's credit score, that can give you a much clearer idea of where they are as a business, and what they are able to do. So I think again, don't just take a standard approach. Perhaps start thinking about how do you assess those businesses truly on their worth, and hopefully provide them the services that you think can help them grow.
Well, I just want to thank all of you for being such a fun audience to talk with and to. And thank you also to all of the panels.